Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. This is your first time viewing. Welcome. Welcome to all of those of you that are viewing on YouTube or the various medias that we're live streaming. Glad to have you as well. If you haven't seen any of our recordings before, we have to show you this disclosure/disclaimer. It is a requirement, so please take a screenshot of it, read it in detail at your leisure if you haven't seen it before. A couple of things that the powers that be want us to highlight, make you aware of is number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So with that, the way TradeFinder works is we'll do a review of the markets, and we've added some international markets for our international viewers, and a reminder that if you like trading the U.S. market, you can still trade the international markets through the U.S. markets via the vehicles that we show in our previews or review of the markets. Then we'll review any closed trades that we may have done for our alert subscribers, give you an idea of how that works. Got something interesting to show you this evening, and then we'll go through and catch you up to date on past case study considerations that we've identified in TradeFinder, which is what we do. We go through and look for something that you might want to consider putting a trade on. That's why they're called case study considerations. And once we've reviewed those, it might consider to be still open. Then we'll look for a new one for this evening that will count as this TradeFinder's case study consideration. Whatever time we have left at the end, we'll open it up to a Q&A. And that usually amounts to you guys giving us some of your symbols, and we take a look at what our technical indicators may say about your favorite stock symbols. If you have other questions or comments, you can leave those as well. But in general terms, it's usually people wanting to take a look at their symbols. All right, with that, let's go ahead and take a look at the market. Obviously, big rebound to start this week. We actually had closed out some puts. We have impulse strategy and we have volatility strategy. And our volatility strategy is made up of strangles, which all have long puts, and they act as protection against our directional trading impulse strategy. We haven't had as many strangles on lately because the volatility has been so elevated. The VIX has been elevated, closing above 30 a few times here over the past week. So we had puts on both the SPY and the QQQs as protection against the upward directional trades in the market. So on Friday, we closed the SPY puts and the Qs puts out, and we put calls on, and we closed out the SPY calls yesterday because the market bounced to the upside. And the motive is always important when you're putting on a trade to have a trading plan and remember what your trading plan is. Well, our trading plan was to capture the market from this oversold condition where we were at the close Friday, moving back up towards that 10-day moving average. Well, that's exactly what happened yesterday, closing right on the 10-day moving average. That was the goal. So we took a nice one-day gain. Obviously, you could take a look at it today and say, oh, gee, I wish you would have held it on. But we did hold the call, the QQQ call until today, and closed that one off today. It didn't have quite the move back to the upside that the SPY did yesterday. So we were able to catch some of that move today on the Qs as well. So here we are back up towards that 470 area. In my opinion, we're kind of in a bit of no man's land here. Perhaps you watched the SPY recording on YouTube. For you YouTube viewers, go to our channel, EWO Options. You can see it in detail there. But the support level that we talked about in that recording is right here around 450, which is what we tested multiple times at the end of last week. And that's the highs from back in September. And then we have resistance up here at 470. So we have this completed wave 5 Elliott wave pattern here. And at that point in time, you look, all right, what kind of corrective pattern are we going to have? And that's kind of what the market's been doing. It was a corrective test of both those highs from the beginning of September and the 50-day moving average. And so now we're back up towards a resistance area. And based on today's close, you could argue that we're a little bit overbought at this point in time. So I think at this moment in time, it's prudent to say, all right, let the market show us something. If we break below this 450 level, the support, then we're coming all the way down here to test these lows, very likely from back in October at around 430. And if we break above 470, perhaps we're off on a new impulse move. One could argue that there's a pretty nicely formed zigzag pattern coming from this low here. Right there, you can see about a 50% corrective move, and that would give us 100% extension up around 494, which is possible moving in towards the end of the year. But I preface that by we're a little bit overbought right now, so I don't know that we have the energy to break through these highs at 470 to make new all-time highs without some sort of a consolidation from these past 2 days. So likely some sort of backing and filling, maybe a little sideways movement here, or then we blast through there. Markets can stay overbought, oversold for short periods of time, but they don't do it for long periods of time. So we'll see if we take a shot at that 470 or rest here for a couple days. The most healthy thing for the market would be to consolidate underneath this level, let the energy catch back up, let the 10-day moving average catch back up, and then try to make a run through to the new highs. But just thought I would share that with you as a potential target on the SPY. Looking at some of the other markets, our subscribers really like us to look at the diamonds. So here's the chart here, and it was a little uglier than the SPY chart, but it also came down to a strong level of support. You can see 340 going back into April as far as a support resistance area. So we came down and tested that and bounced back up. A couple gap ups on the diamonds, and so a little bit overbought here now as well with the gap. And we had this bearish cross of the 10-day crossing below the 30-day, and now the 10-day is coming back up. Do we get a reverse cross? That would be bullish for the market. So a little bit uglier as far as we came down here, but more healthy. You could argue that we tested a major support level. We aren't back quite as high on the diamonds, on the Dow, as we were on the are on the SPY, where we're right up there towards resistance. We've got a little ways to go to catch on the Dow. So kind of a little bit off on the markets to the Dow and the SPY. That usually doesn't last too long. They're usually fairly much in sync, but they've been since the highs in November a little bit different as far as the corrective moves and then this subsequent bounce. So perhaps the Dow needs to do a little catch up versus the SPY. I think the next couple of trading days, again, the healthiest thing is let's just consolidate here a bit. But same type of thing here is if we break below 340, that's a pretty good bearish trade on the Dow, because look, we're probably coming all the way down towards this area right in through here around 315. If we break to the upside, we need to break those all-time highs there around 365. If we do that, then maybe we're off to the races there as well. So again, pretty defined levels, I think, in the markets from where we go from here. It's just this is a point where pause, take a breath, let the markets tell you where they're going from here. Let the markets give you the next impulse move. And then let's look at the Qs and see, we'll take a look at interest rates as well. And the Qs also, all out of the Dow, came down, tested this support level, broke the 50-day moving average, but only one day, no follow-through day. We talk about that all the time to our subscribers. You have to have a second day, a follow-through, a confirmation day, because the market does head fakes all the time to suck in the retail traders. So we came down here, found support, bounced back up. So we're above the 10-day moving average here. And now look at the Qs, kind of right there at the resistance level at 400, not as overbought as either of the other two markets are at this moment in time. So do the Qs try to resume leadership, break to new highs first? It's likely. So we'll see how that plays out. But note that the move yesterday wasn't nearly as strong as it was today. And that's why I was saying we didn't take the calls off the Qs yesterday, but we did today. And you might say, well, there could be a whole lot more movement. There could be, but remember your trading plan. What was your motive? Why did you enter the position? If that gets satisfied, don't be greedy. Take it and go. You make a nice one-day trade, be happy with that and move on. Don't try to think that you're going to catch every bottom and every top. Nobody does that. And I thought we would take a look at Bitcoin, and you can see that we had kind of filled this gap ugly over the weekend on Bitcoin. All kinds of speculation on the financial news as to what was going on. Some people were blaming it. I featured this in that YouTube recording on our YouTube channel regarding the SPY and specifically Bitcoin, about the fact that in this new infrastructure legislation that Congress is passing had some legislation on taxing of digital currencies, et cetera. And some people were thinking, well, that was the reason, but that's old news. We've known that for over a month. That's been detailed on the financial market. So I don't think that had anything to do with it. Call it what you will, wash out, flush out, moving around, risk management adjustments, whatever. But we talked about this in the update, and look, we have a wave 4 right at 55%. That's a pretty good area of support for it to hold. And we're right in this whole area right through here where there is good support on Bitcoin. And so we could turn and rally towards the end of the year from here and go up and hit that wave 5 target. But a really good area for Bitcoin to find support. But note, we are still below the 10-day moving average, and nothing matters until we get back above that 10-day moving average. We still have the bearish cross here with the 10-day crossing below the 30-day. Comment about that a lot. Got that. I've been watching that for years. Some old market maker friends turned me on to that a long time ago, that a lot of floor traders look at the 1030 cross for a sign of an emerging trend or switching change of direction of a previous trend, et cetera. So we still have to maintain the fact that all we did was come up and bounce back off a little bit from a pretty significant oversold condition. So again, we got to get back above the 10-day moving average before we can continue talking about anything more to the upside on Bitcoin. Caution is there. So patience in the regular markets, still some caution here with Bitcoin until it lets us know where it wants to go from here. The IWM, so we had talked about this before with this move to the upside, and we did put on a bullish trade on this break above 230 for our subscribers. So through here, and obviously there was some questions as we came back down, but we didn't even make it back down to the support around 210. We did have confirmation on that move higher, so it was a little surprising. The test of 230 was not surprising at all. You break something, and that 230 has been resistance for a year. So when you break above it, to come back down and test it, that's not a surprise at all. But the fact that it broke below it was a bit surprising. But here we are in 2 days, back above the 10-day moving average and almost back to that 230 level. So if we can break back above that, then I think maybe the IWM makes an argument for the small caps taking a bit of a lead. But let's not forget what the Federal Reserve has been doing, and flip-flopping back and forth is really like a fish out of water, is what Chairman Powell has been doing. Oh, we're not going to raise rates as fast, or we're not going to taper as fast. We're going to put off raising rates. Oh, no, last week, maybe we need to go faster. And it's like, which is it? Not very good at trying to guide the markets towards Fed policy is Chairman Powell. So you can see we did have a move back to the upside in interest rates, and you might be thinking, well, gosh, I thought interest rates moving higher was a negative for the market. Well, we were starting to get to the point, and look where we held, right at the 61.8% fib level. Talked about that in the SPY YouTube update as well. And also coming back down here to retrace the breakout of this triangle, which is also classic Elliott wave corrective action. When you break out of an Elliott wave corrective triangle, it's going to get retraced. Sometimes right away, sometimes takes a little while, but that move will get retraced. Those are the rules. And so we came back right to the point of the breakout, right at the 61.8% level. That was a pretty strong level for interest rates to mount a bounce. And we're back up to the 10-day moving average there on the 10-year. The market has liked that. Obviously, why? Again, because all you're hearing is that interest rates are bad for the market, especially the tech sector. Yes, unless interest rates start cratering, because if they do, then that's a sign of economic weakness. So the fact that interest rates have caught themselves and are rebounding a little bit, that's giving the markets a little comfort as far as potential to move back to the upside. So I've been saying that as long as the 10-year stays somewhere in this area, even up to this wave 5 high, stays below 2%, anywhere in here, the market can handle that and we'll be okay. But if we break much lower than this, then that's a concern for economic weakness. And if we break too high, then yeah, that starts to become a negative for the equities market and specifically tech stocks. But in this area, kind of the sweet spot where you want to see things hang on in there. So let's look at some of our international markets. The XJO, nice couple days there as well, came down and found a really strong level of support. So I think if you're looking at trading the Aussie, you can feel pretty confident about the fact that we had this test down here, nice little triangle, broke out of the triangle to the upside, came back down, tested that same level, the bottom of the triangle, and we've rebounded nicely. However, again, the 10-day moving average is still below the 30. So we just want to make sure we don't get ahead of ourselves and start feeling like, okay, that corrective move is over. We're off to the races again. Not so fast. We've rectified an oversold condition. That's where we are. So we need signs that really that the next leg higher is underway. We don't have that yet, not until the 10-day crosses back above the 30. And in addition to that, we're also right into an area that could add some resistance. So same thing with our markets. The best thing would be some consolidation right under this level here around what 74.40 or so, and then make a break and try to run to a new high. But certainly all the markets looking a lot better than they did last week, no doubt about that. So we probably want to see the Nifty. We had highlighted that one, talked about how important 49 was and what was going to happen if 49 got broken. We were coming right back down to 47, and look what's going on. We're just kind of treading water between those levels now. And that makes sense because 49 now becomes resistance, 47 becomes support, and that's where we are. So when it's talking about those levels to watch for our markets, same thing if you're interested in trading the Nifty, break below 47, you can see we did it again. So we've done it a few times here, but no follow through day. Broke below, rebounded back up, broke below and rebounded back to the upside. So no follow through as far as breaking below that. So far it's holding, but there's your levels there. You break below 47 with confirmation, you go short. You break above 49 with confirmation, you can look to go long again. So this is kind of like a, all right, let's relax this week type of a market and let the market tell us where it's going to go. Kind of pervasive throughout all the markets, I think. Now let's look at the DAX. And that's one that, boy, Elliott Wave has absolutely nailed that move to the downside. And then we got this relabeling of the wave 3 here. That was a wave 5 target. So that's kind of an indication that perhaps we're not done to the downside on the DAX, and now we're rebounding up towards a possible wave 4 corrective level. For those of you that are brand new joining us on the streaming services or haven't seen us before, this program that I'm using is called Profit Source. You can learn more about it at hubb.com. To me, it's the best Elliott Wave software out there. It's programmed directly from the algorithm that Ralph Nelson Elliott himself wrote. But when you see this 4, it is not telling you we're in the wave 4. These are projections. So it's telling you if the wave 4 labels, that's an area where you can expect some resistance for a turn and possible move down to a new wave 5 low. So it hasn't labeled yet. So those are just projections. The only the last wave to label is the wave 3 there. Also, kind of a bit overbought on this bounce. And that's hard to say anything's overbought on the DAX because it's been having a really rough time. But a big gap up there, back above the 10-day moving average. And so just a little bit of separation from the 10-day moving average. It also could probably use a little bit of calming down. But it did create a pretty nice base here at that wave 3 low. So the fact that it consolidated here, it was pretty ripe for a bounce. Perhaps we get a little bit more of a bounce out of it before it consolidates. As I've mentioned, markets can stay overbought, oversold for short periods of time. So one day does not, make it, oh, it's way too overbought, it has to recover. Maybe we get a little bit more follow through, maybe not. But so we're watching this 33 level is for the wave 4. And if we start to break above that, then we go back to looking at the next resistance level up at 34. So 33 now, 34 if we get above that, but that's way down the road. So far, you're just a little bit of a bounce here. So if you're looking for a long position, I don't think you're there yet. If you're short, I don't know that you're too worried about that yet either. So again, kind of a, let's see what happens here. This is a one-day phenomenon on the DAX, where we've had a couple days on all the other markets. So that gets you caught up on all the different indices. I did want to show you the dollar. So here's the US dollar, and still in a really nice triangle. Now this could help determine where the next move is at the equities. With the equities at a point where they need to rest a little bit, the dollar is at a point where it's ready to break out. So if we get too severe of an upward breakout, the equities market might not like that. I've mentioned numerous times, I'm a fan of a stronger dollar. I think having a strong US dollar is a positive. And if we lose that, if we lose the dollar, like we were concerned about that back here in May and June when the dollar was moving down, and we found the support area right in this to start the new impulse move to the upside. But coming down there, you lose the dollar as the reserve currency status, then now you're in a whole global economic mess. But we didn't, it held. And you can get to the point where you argue that, well, the dollar gets too strong, it starts to hurt on exchange rates for international companies, et cetera. But I'm a personal fan of having a strong dollar, giving the fact that that likely means that there's underlying confidence in the US economy from global other countries. That's the way I view it. So I think having a strong dollar is a positive, as long as it doesn't get too far out of control. But we're probably going to get a little bit of a bounce here, or a little bit of a breakout from this triangle. They always do. So do we break down here towards this wave 4? A little bit of a downside break. I think that could give more fuel to the market. The market might say, okay, cool, we're ready to go. And if it breaks to the upside, I still think we're okay for a while, even up to this wave 5 target. But if the rally continues, then we may have to look down the road at that potentially hurting some growth. But for now, again, the sweet spot is where we are with the dollar. So when you look at rates, they're in a pretty good area. You look at the dollar, even regardless of which direction it breaks from here, we're still okay here. So we do have the underpinnings of potentially another leg to the upside in the market rally, keeping in mind with this tapering that the Fed's doing, they're going to put a lot of weight on the next inflation report, the CPI, PPI, et cetera. So when that comes out, they're going to be focused on that really, really closely. So that gets you up to date on all the markets, et cetera. Now let's go ahead and take a look. I did want to show you a case study that we have for our subscribers. This is what our website looks like. If you're new, if you're streaming with us, you haven't seen us before, our website is EWOtrader.com. And this is what every single alert looks like. It has its own page. And here we were looking at PayPal. Now we have a lot of faith in Elliott Wave. It is our primary indicator. And then we have a set of supporting technical indicators that create the system around Elliott Wave. We're fans of every one of our technical indicators, or they wouldn't be in our system. From time to time, we do find potential trades that we send out in alerts based on our individual indicators that weren't from the whole entire system. And the CCI has been pretty good in the past about finding some scenarios where you have either really overbought or oversold conditions, or in this case, a divergence signal. So you can see here, PayPal was coming down. We've got a gap here that hasn't been filled. We got resistance all the way up here around 240. But look what was happening as PayPal was coming down and then starting to do a little bit of support here. The CCI was moving to the upside. So it came off this extreme point low. You can see how many times it's come down to that area right around -200, which is a pretty good threshold for support. So the CCI had been working its way higher, even as PayPal had been working its way lower and then consolidating. That's positive divergence, which means from this point, you're expecting a potential move higher. And so we see we have the gap there for a point where we could see where the position lies at that point. Then we have the wave 4. So what we did was we sent out a call, March 230 strike call. You can see it's a 5% gain at this point in time, which is it was down 3%, then rebounded with the market today. So we're just kind of in this area where not a whole lot, haven't lost much, haven't made much yet in the position, but that's the idea. So if you're not comfortable or confident in your indicators, they shouldn't be in your system. So that's what I wanted to share with you, is that if you're creating a technical trading system, and that's another great thing that you can do with Profit Source, is you can create your own technical trading system. If you want, I have mine. Well, I'm going to show you the indicators here in a little bit, or the search that is derived from the indicators, but you can create your own. But why have a technical trading system if you don't have belief in every one of the indicators that's in there? So we don't do a lot of that, but from time to time, when we find an opportunity like that, we want to try to take advantage of it. So I thought that was something a little bit different, a little more interesting. You hear us talking about Elliott wave all the time, etc. So that's it. And it's in a wave 4 corrective bounce to the upside as well. So even the Elliott wave pattern is conducive to a potential bounce higher. All right, so let's get caught up on some of our past case study considerations. Here we have Camping World, which is in a triangle pattern. These have such a high percentage chance of breaking out, these triangle. Well, at this point in time, you can see, well, we broke to the downside, but we only broke to support. We broke to the upside, and we only broke to resistance. So this one hasn't made a definitive break yet, just broadened into a trading range. That doesn't happen very often out of these triangles. So at this point in time, we might give this one another week, but start to look at, we'll just take the loss on this one and go. All we're really looking at is a loss of time value at this point in time. But if the market does recover and get stronger, perhaps we can break this resistance area that it tried, had a good earnings report. So it ran up and tried, but it got turned back. So the shorts stood up and pushed it back down. And we'll see if it wants to turn and try to run again, because you can see it's sitting on the 50-day moving average. So perhaps a little bit more time, but at some point you have to say, all right, it's not going to bounce. But that's just so rare that they don't. You want to give it every opportunity. And then we had, here is INFO. And we had originally looked at that one, and we sent this one out as an alert to our subscribers as well. And then we adjusted to the upside. It initially was from this downward move here. We had a breakdown with what looked like a pretty good follow through or confirmation. And then we started turning back to the upside. So what we did for our subscribers in the adjustment was we took the put off and we readjusted to a call, and you can see what's happening to that now. Nice move to the upside today, closing at a new high today over this high that closed back on the 16th. You can see the closing price was 131.75, closed at 131.92 today. So just slightly closing higher on the move today. And we'll see if that can continue through. It'd be great to have some follow through there. And then that turns into a nice adjustment from being wrong initially to making a nice gain. That would be quite welcome. So the XLF, you can see that we're sitting here and we came down to this area, which makes sense with interest rates coming down. That's a tough environment, but we held where they needed to. Break below 38, you either adjust this to puts or take it off, but it did hold at support, bouncing back to the upside. So we'll keep monitoring this one for a while. We're almost back up to 40 in the area where we entered. And so you can see there's a doji yesterday, moved back to the upside today. If interest rates continue their bounce back to the upside, this could power through to a new high, and that could be in good shape. Looking at FND, there was our entry, and now look at the consolidation that we've gone through, also holding where it needs to. And I talk to subscribers about this all the time. Things don't always go immediately where you want them to go. Now, remember, the ones that we're looking at, for those of you that are viewing and streaming and may not have seen them before, all the other ones from all the other weeks, we've already closed out. And overwhelming majority of them closed out at nice gains. So the ones you're seeing are the ones that we haven't closed yet. So we came down here to support at 130, and that's held at this point. And so perhaps we get another run here out of this, but it needed to hold 130, and it did. So once it does that, again, patience, monitor the pattern. Don't be so quick to jump out of a trade, just as you don't want to be so quick to jump in one. We've been talking about, hey, we want to be patient on entering a trade. Patience also comes into exiting a trade. If the pattern changes or you lose the technicals, okay, well, then you want to get out or make an adjustment if there's a new pattern to the opposite side. But stocks don't go straight up or straight down. That's the beauty of Elliott wave. Elliott wave is impulses and corrections. That's the pattern. That's how it works. So you go through a series of impulses and corrections. That's what the market does. So it doesn't always go straight up, and things don't go straight up or straight down forever. They just don't. So be patient. So MMC, we looked at this one back on November 16th. You can see that one, and check this out. Boom. There we are. Now we talk about how we normally look for a 10% move out of the stock on these alerts. We're not quite there yet, but a nice gain here on the move to the upside on MMC. Really nice breakout. Perhaps a little bit overbought today with that gap up. So maybe it needs to consolidate a little bit here or even pull back and test that break. That's a nice break of 170 there. Which means there could be more upside to go. You could even say that, yeah, we're breaking out of an ascending triangle that was in addition to this. And then you look at the DMI, you had a pretty good bullish cross here with the positive directional indicator. The ADX is trying to turn up. There could be a lot more to the upside here. Maybe not tomorrow, but in the not too distant future. But we're almost to the point where you'd want to take this one off. Remember me talking about how McDonald's didn't make sense to me with what was going on in the world, and the COVID and everything. And it just didn't make sense to me that it was moving to the downside. And there you go, rebounded back to the upside. That makes a lot more sense to me. So you can see that we've broken higher here, but now we're a little bit overbought. But look at these 2 days, boom, boom. How fast things turn around. So another stock that came down to support, it needed to hold support at 245, and it did. So it held there, and then we've bounced back to the upside. Pretty vertical move higher here. So you can see that with the break to new highs, a little bit of separation now from the 10-day moving average. So another one that's overbought. Maybe it needs to go sideways, come back down perhaps and test 255 a little bit, but there we go on McDonald's. And so we entered that one on the 23rd, and so we're sitting at 255, and now we're up at 260 plus. So not quite the 10% move there yet either, but awfully nice looking chart. Looks like it wants to run up to that wave 5 target as well. Now last but not least, we have PWR. And that was a bearish trade that was expected to come down here. We thought perhaps we would come down to this 105 area right in here with the wave 4 and maybe even fill this gap. So we thought we might get a little bit more to the downside here. And we've gone sideways and a nice bounce back to the upside. So it looks like it's trying to hold this area of support. So while all the other ones look really good and we want to stay with them, this is one that if we get up here and we break above 120, you either want to get out of this as a bearish trade or possibly look at reversing that and becoming bullish. We're not there yet, but because you can see we had this nice 1030 bearish cross. We did break below the 50-day moving average and thought maybe we'd come down and fill this gap. We haven't. We've only got a 30, close to the 38.2% fib corrective wave 4. So we could have come down here 50%. But at this point, it looks like maybe we want to keep an eye on this with the potential of breaking above that 120 level. We'll see where it goes from here. But might want to look at this one. This is the shakiest looking one of all the case study considerations that we've identified over the past. So we'll keep an eye on that one and see how that plays out over the next week. Rest of them looking really good and probably have some closed out before next week. All right, so let's look for a case study consideration for tonight. And I hit the pre-computed button. And so if you come over here and look at this button, I use this program, Profit Source, and a lot of our subscribers saw it. They've been using it as well. So the folks at Hub that created this said, oh, okay, well, we're going to create some buttons for you guys. So if you're an alert subscriber at Elliott Wave Options, again, EWOtrader.com, And man, while I'm thinking about it and talking about this, we have some of the coolest stuff ever to hit trading coming out in January. I can't wait. So if you're new, if this is one of the first times you've viewed it, make sure you come back and look with us at the beginning of the year when we unveil this. We're going to unveil it for our subscribers soon, but in January, we're going to be talking about this. And I'm telling you, this is some of the greatest technology, newest, is really, really cool stuff that's going to be initiated here at Elliott Wave Options. So no better time to become a subscriber than now. But they put these on here. These are pre-computed, which means all you have to do is click on the button. You can see that there are no impulse searches. So the ones that say EWO, those are my trading parameters. Now you can create your own. And here's some that, and they know I like the DMI. So they created one with, you look at different things with the ADX moving up or bullish or bearish wave threes. They even have some Elliott wave ones where the very first day you move into a wave three. I've been a big proponent because a lot of people teach Elliott wave. They say, don't trade the wave three, wait till 1, 2, 3, and 4 in place, then trade the wave 5. But then everybody agrees that wave 3 is the strongest wave. Why are we omitting that? If you can find a zigzag, something, some sort of a pattern in the wave 3 to give you a target, because that's the hardest part, right? Is when the wave 3 is going to end and the 4 begins. So there are all kinds of different things that you can do there. So we don't have any impulse searches stocks to look for. And look at this. I don't know that I can remember this. The 0 corrective stocks and 0 impulse ones is what I'm talking about as far as the market just saying, pause, take a break. And then on the consolidating stocks, there's only 28 of those. A lot of those got blown out on the move to the downside. So we've had 140 in times in the TradeFinder that were in consolidation. 28 is still a lot. We don't have time to look at 28. So what you can do is you can come over here and say, all right, well, let's see if any of these are in a bullish wave 3. And there's one. And so now instead of looking at 28 charts, you can take a look at one. Let's see if it's a triangle. Just means it's consolidating based on the search. And we want to find a good triangle pattern. We've talked about this in the past. And the XJO was actually in this pattern in the past, but it looks like one of those patterns where you had kissing triangles, and it's kind of a unique thing. So we had a consolidating triangle married to an expanding triangle. So that's why I say they're kissing. The 2 points are roughly the same spot. It's already looked like this is the top of the range. If we were kind of in here in the middle, we might look at doing something along those lines. If we come down here and look at the DMI, it's curling up. This one might be more, look for a directional trade here if we can break these wave 3 highs. The ADX has got to get above 20. It's not there yet. We're separating between the 2 directional indicators. So the ADX moves to the upside and gets above 20, and you keep that separation. We break above this wave 3 high. That's a great looking bullish trade. But it isn't there yet. So we're kind of right at resistance. So this would be a watch list position where you put it on the watch list, see where things go from here, and watch for those signals that I just indicated and see if perhaps we get some sort of a breakout. So nothing there. Rarely is there one in a bearish wave 3. Why is that? Because we all know stocks move so much faster to the downside than they do to the upside. So it's rare when you see a triangle in a bearish wave 3. They just don't really consolidate that long in downward patterns. And of course, there's nothing there either. So we're left with looking, and here's the problem with the VIX above 20 at 22. That's not astronomical compared to where it was recently, but it's a little bit on the high side. But we can look at a couple of these. We might actually struggle to find a case study consideration for tonight. Perhaps we identify something that looks good with your comments, but from what I would be looking at, it looks a bit challenging. We haven't really struggled with that in the past. Well, here's, if we would have looked at this one on Friday, this would have been a great entry here. Look at that triangle. Now that's what you want to see. There's your triangle. But what happened? Breakout. Follow through, but you don't really want it closing on the low. That's not the greatest follow through day ever. But then you also look and say, well, okay, on the high, it was pretty overbought. And on top of that, we're running into some pretty good resistance right there at 100. So perhaps you keep an eye on that, see if it breaks 100. You can look to be bullish there as well, but wouldn't do anything with that one today. It's too overbought, and the breakout's already occurred out of the triangle, so you don't want to put a strangle on that one. So that one doesn't work, but that's one that I've seen in the past. We've done stuff with that in the past. So look at LNG. Natural gas has been having a rough time lately because the weather hasn't been cold enough. But there's a little bit of an expanding triangle. I don't know about that one either. In the 105 area, 100 to 110, it's barely in a 10%. If the ADX was lower, it's getting down around 13, which is what I like. But with an expanding triangle like that, that's not that large, I would prefer to see the ADX even lower, like around 10. So, I mean, you can make a case for that one, but that one doesn't look fantastic either. Intel, the chips, let's see what that looks like. Too late on that one too. Day late on a couple of these, and that makes sense with the movement of the market today. Lear, Starbucks, take a look at Moody's. No, that's no good. So take a look at Starbucks. So you can see, because of today's move, a lot of these that were in consolidation patterns, if we'd done this last night, we would have had a ton of these. We'd have had quite a few that we would have been able to look at. But as far as tonight, everything's breaking out already. So the problem yesterday would have been a high VIX as well. The VIX was even higher going into today. So that could have been challenging. Yeah, a little bit of an elevated VIX is okay as long as you have low volatility in the stock so that the options are fairly priced. But when you start getting a VIX above 30, then that's a little bit more challenging for putting the strangles on. They work better when volatility is a bit lower. But that was a really big descending triangle. And you can see the ADX is trying to move up. Pretty good cross here between the two directional indicators, nice and vertical. And then the ADX coming up, but it's got to get above 20. So if you're looking at, why don't we just trade that one to the bullish side? Well, for me, I'm a big fan of the DMI, and I can't do that until the ADX breaks above 20. Just seen way too many times when the setup was looking this good, and then the ADX just rolls over. You get a nice breakout. It looks like it's going to take off and run, and maybe it does. But for me, I got to wait and see that actually occur. So we'll skip that one now. So we'll try a couple more here. We might have to punt on this one. Let's look at AutoNation. We've looked at this one in the past, and it's consolidated and made a larger triangle. We actually already have a strangle on this for our subscribers. So this looks like this might be, there's that ADX diving down towards 10. It got to about 11 and started to curl up. That could be an interesting signal. Sometimes this happens with these triangles. The CWH1, the Camping World, is odd. They don't usually break out and not break out enough and then move into a trading range, but they do sometimes form larger triangles. And that creates a little bit of patience, or requires a little bit of patience, but then you get a bigger move. So I like that one. We come down here 110 to 130. That one I think looks the best of anything we've looked at. So let's go ahead and let that one be our case study consideration for this week. Next week, if the market continues, we'll have all kinds of directional stuff to look at. Just the market has to make that move that I was talking about. But for here, AutoNation, nice pattern there for a breakout, and the fact that it created a larger triangle. You can see the previous triangle was right here, and then it formed a bigger one. So you see the difference in the size. So that's a positive thing in the long run. It's just frustrating and requires, again, that word that I've been talking about, patience in the short run. But it's even more well-formed than it was before. So we'll let this one, I mean, you know what's going on with autos. You could make a case fundamentally for it to break either direction, couldn't you? I mean, there's almost no used cars for sale. It's hard to find them. So that means premiums are super high, but are they making a lot of money off of them? Probably not, because volume is down, right? So it's a bit of a catch-22. So it'd be really interesting to see which way this breaks from this triangle. All right, so with that, we got a few minutes. So go ahead and take some questions. Cindy wants to look at gold. I can understand that because that's been pretty wild. So we got up here, we consolidated. This was a really nice looking consolidation that occurred. And you're thinking, all right, you run up, you get way overbought, and you go sideways, you come back down, you test the 10-day moving average. We're ready to go, right? We're ready to break higher and take off and run. No, not so fast. Didn't happen. So here we are back down in this area around 166, which is support, 166, 165. So it wanted to go, but it couldn't. So here we're back down testing this again. Bearish cross there on the 1030 after a bullish cross back here in October. A little bit disappointing. We'd nice to see gold take off and run again. But at this point, we have a triangle, so we might just look and say, all right, well, let's just take the puts off if it bounces. But you got to stay now, because if it breaks below that, then could have a big move lower. You could have move lower just exactly the same way you had to the upside here. So it's a good thing that we didn't take the puts off before and just hold the calls. That's why you're very careful in triangles before you do that. So CHRW, did we just look at that one? We just looked at that one. So MCO, Moody's, and we looked at that one as well. Mike, so you're just kind of ahead of me as far as these, and looking at Moody's again, a lot of support there. I think you want to look at this one more for a directional breakout with if it can break above 400 here, a little bit overbought today, but so is everything. And if it can break above 400 with some conviction, and we get that ADX moving back up, there's a pretty good cross there between the two directional indicators. You could have something nice working to the upside. It'd be a very expensive triangle anyway with the stock at $400, but we'll see where it can go from there. Apple. Everybody likes to look at Apple, so let's look there. And when it ran, it hit 270, which was its wave 5 target, and then it came back down. I actually thought it would come down and test that area, the wave 3 high, maybe just a bit longer, but it only needed to come down and touch it one day, and then it's rebounded back to the upside. So Apple looks like it wants to go, but now it's overbought again. I think perhaps letting it have a day or two, and then you look at the DMI, looks pretty strong. So yeah, see what you're looking at there, Mike, the ADX curling up. But as far as doing it tomorrow, being a little bit overbought, I would want to see maybe this gap get filled or go sideways and let the 10-day moving average catch up a little bit. Apple's not one of those that gets some. I think we talked about this last week. Apple doesn't get very far away from the 10-day moving average at all. You know the expression, no security in any time frame gets very far away from the 10-day moving average, but Apple especially, you can just see it just hugs the 10-day moving average, almost just doesn't get very far away. This is extreme for it. So I would want to let it calm down here, but perhaps Apple's ready to run to 200. I think that could very well happen. XSP. So on the Toronto exchange, is that what we're talking about here? So nice move to the upside there. Now, you didn't really get a definitive 1030 cross here. They just kind of came down and met at the same spot, and then a gap up today. A break above 51 could be very positive here for XSP. Let's see the DMI. It looks like we're getting a cross there, and maybe the ADX comes down a little bit more. Yeah, I think this one would be best to consolidate here under 51 and then watch for a setup for potential break above 51. Then you might have something going. It's got a pretty nice uptrend there as far as that 45-degree angle, a bit of a triangle trying to form. That would actually make sense. If it consolidates here, as I suggested, then you have a really nicely formed ascending triangle. Not quite there yet, but I could certainly see where that could play itself out. So perhaps in the not too distant future, you could have a pretty good upward move there. Constantine was asking if this gap filled the other gap on the diamonds, and I'm not sure which is the other gap that you're talking about. These gaps got filled back here in October. This gap here maybe is what you're talking about. So does it count? Well, it counts as far as filling this gap, but it did it with a gap. So probably a little backing and filling at some point happens there. But if the question was, is this gap count as filled? It does. So almost a bit of an island reversal here. And if you're new to that expression, that's when you have a gap, well, in this case, gap down and then gap up. So you've got two gaps here, and it leaves these bars here, right in here, just kind of floating in an island. Often that's a signal of a directional change. So it could be a signal that the Dow is getting ready to take off and go. Twitter. I'd like to look at Twitter. And with the sell-off, along with a lot of the social media stocks, struggled a bit. And nice day yesterday out of Twitter. And then if we look at the moving averages, you can see that traded up to the 10-day moving average on the high there, came back down. So not the finish that you're looking for on the day, but the positive thing is that it did get back above 45. The key is now it has to get back above 50, right? Because there's the next area of resistance. So it opened above it here on the 29th, but then, you know, all the stuff that happened with the market since then, and it brought it down. Very key, very important for it to hold this 45 area. It's got to get back above 45 more convincingly than it did today, and traded below or closed below the 10-day moving average. So you'd want to see it come back up that area, but tons of support here at 45. So it needed to hold that. It really needed to hold that. And so far you can say it did, but it's not definitive enough yet. It needs to break back above that area a little bit more, guys. So just give that one another day or two and see what happens. We looked at McDonald's. Perhaps you were wondering about that for a bullish trade. Again, I think that we need to let that calm down a little bit with that move. That was nice. LPX. At a really good point of resistance here. Nice run. Gunther, you know I like this 45-degree angle. I don't know that I would call that one an ascending triangle because there's just not enough touches of the resistance line. It's just running up here to new highs. And you look at the DMI, it's really sad. I can see why you wanted to look at this one. That's almost there, right? ADX is just about to break above 20. Great separation between the two directional indicators. This could be really something to look at. Once we break above that 75, it might really take off and run. That could be pretty impressive. A tiny bit overbought, not too significant though with today's move and the way the DMI is setting up. Yeah, that one could continue to power higher. Really like that one. So yeah, this is what I was talking about. This is one of the things that I enjoy about the Q&A is you guys come up with some good symbols as well. And so it didn't show up on our search. So something's not there in the full system, but that is a pretty good looking setup there with potentially a relabeling of that wave 5 or at least a new wave 5 high. Got to get above that 75, but the DMI is supportive of it doing that. The CCI is, that might be the issue. It's up in the upper end of the range, but remember stocks can stay, or the CCI can stay in that upper threshold area. And then we look at the money flow, looks positive. That looks really good. So yeah, I can see why you like that one. That's the best looking chart I've seen of everything. So Devin, you know, the XLE is held in there pretty well considering what's, oh, here's your, man, over the past year, I think you've heard me talk about this before, how many of these expanding triangles, you used to almost never see them. They were always consolidating triangles. It was rare to see an expanding triangle. And now for some reason over the past year, probably a year and a half now, there've been tons of them. That's a great one there. And so the wave 4 came down to 30%, but it's holding right in this area. Would have preferred it to get down to 38.2, so just a little lower on the dip, but you know, we're getting picky now. It had to hold 40 here on this move lower because you can see how vertical this run was up here. And if it didn't hold that, then we were going to have a problem because it would have come all the way back down to 30 in a very short period of time with that vertical move. What goes straight up comes straight back down. So it would have had no resistance in the way, but it did. It held it. Now it's trying to break to new highs. We look at the DMI. You've got the positive cross. The ADX, this one doesn't look quite as good as the Louisiana Pacific to me, but it could be setting up that way. I think we just need a break above 45 and let the DMI set up a little bit more, but I can see why you like that one as well. You can take some of these charts off here before we start to run out of virtual memory. All right, we'll take a couple more and we'll wrap things up. MA. And then we'll look at DAL. So MasterCard, this one was surprising me as well. I think we looked at this one in a bit before, didn't we, Carrie? With this break below there was really surprising to me going into the holiday season. You think this is the time, right? This is for those that look at seasonality, et cetera. We're more technical, but you can make a case for that. That surprised me that it broke that, but now we're right back up here. If you look at the moving averages, we're a tiny bit overbought, so we're at resistance. So we have to see a further break of this, and then we have to violate this wave 4 here because it's still in a wave 5 impulse pattern to the downside. So right now, you would look at that as, all right, we're testing resistance. Are we going to turn and head lower from here? That can happen. But if it breaks back above 340 convincingly with follow through and can get up here to 360, you could start to have a bullish trade. But for me, it's got to get above 360. Pardon me. To look for anything bullish, from a bearish standpoint, does it bounce back down from 340 from here? And Delta Airlines, nice bounce up here, filled this gap, which is that a good thing or a bad thing? Man, it's just had to be brutal to run an airline over the past couple of years. Mentioned that before, but bounced back up, filled the gap. Now we're at resistance. So this is very similar to what we were just looking at with MasterCard. It's gap back up or run back up, but it's only run to resistance. And we have to see if we can break above that. Now, this one is not in a 5-wave impulse pattern to the downside. This is in a corrective phase. So a little bit better potential for the upside here. If we can break back above 39 with follow through, I think that one runs. This could be something to really keep an eye on, right? If you can break back above 39 with follow through, I think you go to 46 really quickly. And maybe it's because Some of the stuff about Omicron is, yeah, it's super contagious, but the symptoms aren't as bad. So some of that fear from the initial concern about how contagious it was has started to wane a little bit. I don't know, although the medical stuff seems to change all the time on these variants. But yeah, I think if you watch that one, if it breaks above 39 with follow through, you've got a move to the upside there. But same thing, since we're at resistance, you have to watch for, can it break it? If not, it likely going to fall back down and test those lows again. So a lot of these stocks, there's so many of these stocks are at support. I think we're going to have a lot to talk about next week when we get together. So thanks for your attention, those of you that were streaming. Appreciate having you on as well. And I sign off the same way every time. Time is the most valuable thing that we all have. And we very much appreciate the fact that you commit some of your valuable time to spend with us. And then we do our best to make that time informative and educational. And I hope you found that this evening. Thanks again so much. Look forward to talking again next week.